Tom Lee has just released his top stock picks for October. Top 5 stocks that he absolutely loves. And in fairness to the chap, he has been consistently ahead of the curve. It is, of course, up to Lula to do all the research, but she's done diligently. And in fact, she's even found his top 6 stocks. That's a bonus stock, isn't it? Yes, that's how we roll around here. So in this video, we're going to dissect these stock recommendations, plus a bonus granny shot, as he calls it, that is remarkably simple and intriguing. These companies are at the forefront of AI, healthcare, tech breakthroughs, basically reshaping the world as we know it. As we delve into these potential game changers, I'm reminded of our recent success. Our teaching portfolio is up 94% this year. All credit, of course, where credit's due. Chief financial analyst in the house. And if you want to learn how we do that, if you want to learn the simple 3-step system that I use, come and join me on Tuesday at felixprehn.org/bootcamp, and I'll teach you. It's part of our mission to make 1 million people financially free, led by this kitten. Now, let's kick off our list with a pharmaceutical powerhouse that is really having an impact, deflating people as we speak. Eli Lilly, company ticker symbol LLY. And you might be thinking, why is a 145-year-old company on a list of top stocks for 2024? Well, these guys are positioning themselves at the forefront of one of the most exciting developments in healthcare. I wouldn't really call it healthcare, to be honest, but, money making with pills. It's called a weight loss drug market, and drugs they are. And Eli Lilly's financial health is insanely healthy as a result. We're looking at a gross profit margin of over 80%. So for every dollar they bring in, they keep 80 cents, which is the sort of thing you normally see in software companies, not people who manufacture drugs. So are they ripping you off? Absolutely, absolutely. What can you do about it? Well, you can buy the stock price and benefit from it. Their return on invested capital is 33%. So those guys are just making money head over heels. And what is it? It's their wonder drug. It's called tirzepatide. It's marketed as Mounjaro for diabetes and Zepbound for weight control. It's exactly the same thing, but they get FDA approval for both that way. And it's flying off the shelves faster than treats at a dog show. In fact, demand's been so high, it was on the FDA shortage list. But guess what? It's been removed from that list, which means Eli Lilly has solved the production issues they were facing. They've invested $18 billion in a manufacturing site since 2020. So should we buy? Is it cheap? Well, the PE ratio is at 112, which is kind of sky high. But the long-term projected profit growth is 33% a year, which means this high valuation is going to evaporate if you hold on long enough. So how would we approach maybe buying or even trading the stock? Well, I go to tradevision.io, which is the platform we built to give everybody the same quality data that Wall Street has access to. And you can see it's been going up pretty much in a straight line, which is also why it's very, very hard to do better with trading. Probably the best thing is to buy and hold the thing. If you zoom in a little bit right here where we are, what do you see? Well, you see that if you connect the tops here, we had this sort of downward trend, right? That high there, the next one was lower, this one was lower. We've broken out of that, so that's quite sweet. Now there's still going to be, and I'll use a different color here, there is still going to be this sort of resistance zone here from this high and these highs. And if you connect these and draw a line across, that kicks in sort of around 960, 950. So there is definitely some resistance there. Once you break through that, I think it's time to party. So I'm probably going to wait a little to see if it manages to break through that resistance line and then load up on skinny people. Soon to be skinny people, I suppose. Now, as always, stop losses, super important. Managing risk is how you actually make money. Just buying and closing your eyes and hope the market will sort it out is very, very rarely a good idea. You want to learn how we do that? Well, come and join me on Tuesday, felixprehn.org/bootcamp, and I'll walk you through it. So What about the valuation problem then? Well, yeah, it looks inflated, but you see, they have a super strong market position, and their recent drug developments, I think, make it a pretty compelling option for people who have a longer term outlook here and might want to get a pie of the pharmaceutical sector, as unethical as it might be. Now, next on our list is a tech giant that is making waves. Well, this was a company that apparently is going to go out of business. No one's using their platforms anymore. It's dead as a dodo. TikTok killed them off. Except they haven't. And we are, of course, talking about Zuck's little baby, Meta. The outdated social media who failed to develop the metaverse. But you see, look at the numbers. Their financial health is so amazing. It's incredible. Gross profit margin is 81%. That's just insane. Return on capital invested is 28%. Also fantastic. They're just printing money. And Meta has just unveiled MovieGen, an advanced media foundation model. A what? Well, it's sort of not just a photo filter. It's an AI that can actually generate high quality video from text and perform precise video editing. So it's sort of a Hollywood studio in your little Meta pocket. Now, integrate this into Instagram. It could absolutely blow up content creation. It could drive user engagement through the roof and attract more creators. And what does that mean? Well, it means more viewers, more advertising money for good old Zuck and us shareholders. And I've loved Meta as a stock forever, somewhat loathe the products, but that doesn't really matter. You see, we don't get to have that luxury, I think. I think we should just focus on the numbers and the charts. So let's talk numbers. Meta's PE is 28. Bargain, right? It's an absolute bargain. The forward PE for next year is only 19. How does that work? Earnings are going to outgrow by some insane level. So how do we trade it? How do we make money with it? Again, we go into Trade Vision here. You type in Meta and click on it. There she is. And you look at the chart and it's been, again, almost a straight line. We have, however, managed to actually beat this very tremendously with our little indicator here. So if you bought it beginning of 2022, you'd be up 50%. If you traded it according to our indicator, you'd be up 175%. Of course, past performance is in terms of future performance and all that kind of stuff. But how does that work? Well, buy when it goes green and you exit when it goes red. I think it works insanely well. Like we had a buy signal here on the September 12th, and then we flew up another, $60 since, so 15% up or something like that, which is a pretty sweet run. Now, I think we can do a little bit better on the risk management and therefore get out a little bit earlier than the indicator managers too so far, because human brains are still somewhat smarter than AI-driven algorithms. And if you want to learn my risk management strategies, as I say, come join me on Tuesday. But also play with Trade Vision. There's a week's trial you can play with. It doesn't cost you anything. You just cancel it on day 7 if you hated the thing, and then you let me know. And you say, Felix, I hated your software. Most people seem to really enjoy it. We've got about 12,000 users on there or something by now, which is super cool. And we feed everything back into data and into the development team to make it better and better and better. So lots of cool stuff coming up there. So in my humble opinion, Meta is best positioned to profit from AI quickly. Why? They show you better ads, more relevant ads, and then they allow you to generate and create better ads. So you have two sides of that AI game, one purely data, one content creation, which is really what advertising is all about. And you combine those two things and Meta makes a heck of a lot more money. Pretty simple, really. Now, what's stock pick number 3 from good old Tom? Well, Tom says in your Christmas stockings, even, not stuffings, you should have NVIDIA. Ticker symbol NVDA if you've been sleeping under a bridge or something. And NVIDIA is the titan of AI and GPUs. And basically they are creating the thing that allows AI to exist. That's essentially what they've done. And the numbers are marvelous. I mean, this is essentially a manufacturer. I know they outsource the manufacturing, but for all intents and purposes, they still have to pay for the manufacturing, right? And they have a 76% gross profit margin. You normally see that in software only. And Meta 81%. These guys actually manufacturing chips or, paying for the manufacturing of chips, and they still have those margins. What does that mean? It means their product is so far ahead of the competition that they can really, really overcharge for it. And good for them. That's how capitalism works. They should be allowed to. Return on invested capital, 96%. They invest $100 in the next 12 months. They get a $96 return on that. That's just unheard of. I mean, the drug dealers in Colombia, are they still in Colombia? Where are they nowadays? I don't know. They're looking at this and they're going, "Oh, we are in the wrong business." They're quitting. Really, there'll be a shortage of crack cocaine soon. Or I expect people to know take crack cocaine. What do they take now? Some sort of acid thing or something, right? Something synthetic. So there'll be a shortage of that because they will all just buy Nvidia stock. That's how good this company is. So profit margin, the real net profit margin is also 55%. So they bring in $100, they keep $55 of that. It's just also extraordinary, absolutely extraordinary. And they're about to release the, Santa. It's called Blackwell. And it makes AI processing not 10 times faster, but insanely more energy efficient. So if you run a cloud computing network and you've got to do AI computations, you have to buy these. Why? Because otherwise your competitors will be offering the product cheaper than you and you'll go out of business. So they literally have Microsoft, Amazon, Google, Tesla, Oracle, all the big tech guys just by the ear, and they're holding a gun to their temple and say, "You better buy it, otherwise." Maybe the drug guys already are invested in Nvidia. Maybe they're running the show. So it's just an extraordinary business. And you know what? Yeah, it's trading at a 61 PE, but look at the forward PE. It's 26, which is cheaper than Meta, right? So profits are just expected to grow insanely. So what's the risk? Well, a misstep would be the risk, right? So they can't misstep because expectations are pretty high. How do we make money out of it? Well, we type Nvidia into our, if we type Nvidia into our little tradevision.io here, get yourself that week's free trial and play with it. And what do you see? A lot of up, right? The stock's gone up 256% since the beginning of 2021. Sorry, 2022, rather. We actually managed to beat it by 18% with our indicator, which I'm very proud of, because it's very hard to beat stuff that goes up in a straight line. But there were some moments where we did slightly better, which is cool. And we called the last buy signal here at October 8th. So far, that's been a good call. And that doesn't mean you should buy it, by the way. It's just an indicator, right? Like any other indicator out there, you still need good risk management so you know what you're doing and you know when you're getting out, when you're taking profits. The whole buy and hold till death is part thing is rarely a good idea. Buffett says, "Oh, buy forever. That's our favorite horizon." I know that's the favorite horizon because it means you can be very lazy, but I think his average holding period, and I might be wrong on that, I think it's something like 5 years. So nobody holds forever who makes a lot of money, because there are moments when it's cheap and there are moments when it's expensive, and the chart basically tells you that. So come and learn how we exit those things on Tuesday, felixprehn.org/bootcamp. And what's next on this? It's a stock that has done insanely well last week, thanks to Tesla. It's not Tesla. It is Uber. And I was kind of thinking for a while, I wonder if Tesla will make Uber out of business. But the big takeaway from the Tesla We Robot event is that they won't. And it's actually very, very good news for Uber. Because Elon said Uber drivers will be able to buy our robo-taxis and run fleets of robo-taxis. And that means they are not out to kill Uber. They're not saying, "We're not going to sell you any, we're going to keep them all to ourselves. Every robo-taxi in the world will be owned by Elon. And there'll be a great big picture of Elon on the screen and you have to worship him." That's not what he's going. I mean, he could have done, but he didn't. It's a bit of a shame, really, but he could have done. And instead, he's going to sell it to anybody who wants them. And it means that Uber's business model has actually been validated, because the risk to Uber was robo-taxis could replace Uber because they do it cheaper, no drivers, right? Cost will be lower. But in fact, Uber will remain the network. Everybody's got the Uber app on their phone who's alive. And therefore, we're going to keep using Uber. It's just that at some point, it'll no longer be Mohammed who shows up. sorry, I take Ubers mostly in London, and most of the drivers are called Mohammed. You might think that's racist, but that is just a fact. And they're lovely, by the way. And instead, it's going to be some robo-taxi. And it just means Uber will make more money, it'll be more efficient, and it'll be great. So Uber will stick around, and it'll be an amazing business that'll get even better. Because right now, the gross profit margin for Uber is 32%. And I don't really love that. That's pretty low. But you see, they got to pay the drivers. Right? They'll no longer have to pay the drivers. They'll either just go out and buy themselves a fleet and then get some robots to maintain it, or they'll keep the drivers and they'll let the drivers maintain the fleet. But at the same time, margins will still go up because a driver can now manage 10 cars or 20 cars or 50 cars. So you no longer need to pay 50 drivers. You just pay the one. So the margins will improve. And I also like that Uber has been expanding into delivering everything and anything. I mean, I was in London in the summer. I needed tape, duct tape. I had to, tape somebody up. I'm kidding. And then I was like, I can go out and find a stationery shop or something. And I just typed into the Uber app and it came like 5 minutes later on a bike. And I was like, this is pretty cool. So it isn't just food, they do everything. In fact, they've added farmers markets to it in places like New York and LA. And they're just absolutely crushing the whole delivery space. And again, all of that will get more efficient with autonomous driving. PE is 88, which is pretty crazy, but the forward PE that is expected is only 22. And I like that. It just means that their profit growth is picking up, and therefore the stock is actually not particularly pricey from my perspective. If we look at the Uber stock chart here, I type Uber into trends, into Trade Vision again. And what do we see? Well, it's gone up 57% since beginning of 2022. If you'd followed our little indicators here, you would be up 90%, which is a rather nice little bonus, isn't it? And right here, right now, well, we actually called it a buy on the 6th of August. And that's been a pretty good run, right? So that was at, what was the price then? $64 is now trading at $86. So, okay, that was a pretty sweet run. And the beautiful thing now is that there is no resistance. At no point in the last 2 years was the stock ever higher. And that means one very, very cool thing that normally, the stock's been up here somewhere and then's come down and now you're recovering. What happens when your stock goes up here? Well, it means all those buggers sell, right? The bag holders exit. There are no bag holders in Uber, and therefore it's much, much easier for them to go up. So we like Uber at this point. Now, let's talk about the stock that's just made Uber explode. It's Tesla. And Tesla, well, the robo-taxi event wasn't particularly loved. But let's just put some numbers here to start with. Gross profit margin, 17%. That's actually pretty good for a car company, right? Oh my God, he said it's a car company. Shoot him. String him up. Tesla's PE is 62. Forward PE is 65, which means we're expecting growth to pick up, profit growth to pick up. So what's it all about? Well, what's it all about is autonomous driving and robots. And yeah, that isn't happening that soon. Although autonomous driving in Model S and Y, Model 3 and Y, will come probably next year, at least in California and in Texas. And the robo-taxis, they won't be on the road till 2027. But for the people with patience, I think there isn't a stock and a company out there at the moment that actually has this level of product pipeline. So if I pull up the chart here, what do you see? You see a stock that is, since the beginning of 2022, down 44%. If you just followed our little trade signals here in tradevision.io, you'd be up 81%. So we beat the market by, 125%? That's quite sweet, really. And what's the trend here? Right, it's going down. Why is it going down? Impatience. One, a lot of retail investors have very short time horizons. They want to make money by Friday. That's a fairly hard thing to do in the market, to be honest with you. You kind of want to have a multi-year horizon, even as a trader. And Wall Street is as short-sighted as, I don't know, Winston with the treat in front of his nose, right? That's the focus. What's the treat? Where's the next one? And they don't care what happens in 2 years because most of the analysts will not be in the position they're in right now. And a lot of the bankers will have retired and whatnot, or, sniffed themselves to death. And they don't care. They just don't look that far ahead. They think in 1 or 2 year bonus cycles. And anything beyond that is completely irrelevant to them. And Elon's basically saying, we are going to launch the most revolutionary mode of transport we've seen since the horse and cart went out of business. And at the same time, we're going to launch robots that will actually run factories, homes, bars, healthcare, everything. And the market goes, it's not coming next week, so I'm selling. and that's fair. That's okay. I quite like it. It means, a lot less bag holders. So when the stock eventually does go up, it'll go up more violently. And typically that's what happens to Tesla on their product launches. Their product events are typically a disaster from a stock market point of view. Now, what does the chart say to you? The chart says caution. The chart says this was our uptrend. We're below that. We have this high here, we have that high there, so double highs. There's another one over here, actually triple highs. So there's a lot of resistance, and it might take some time for this thing to explode again. But this is not from a chart point of view, but purely from a fundamental point of view. I think Tesla will be the most valuable stock in the world. That's my view, purely on those two products alone. I think the car business will be 10% of it, and I think the robots business will be 90% of it if they do it well. If they don't execute, then okay, then they won't. If Elon gets run over by a robo-taxi, then the party is over. That's the risk really to it. But they are doing so much innovation, and they're doing it all in-house, and they're planning ahead further than pretty much any other company out there. Amazon does also a pretty good job with the forward-lookingness. That I like it a lot. So I have sort of a 2-year plus horizon on this, and I'm going to hold those positions until then, unless, Elon gets run over by a robo-taxi, in which case I'm out. So that's the way I'm looking at that. But yeah, the chart right now says be cautious, but you have to have a view of the future. And, well, I promised you a bonus stock, didn't I? Are we at number 6 already? I can't remember. I lost track. Well, there is a new kit on the S&P 500 block. Do you know who they are? They are called Palantir. It's apparently a meme stock run by nutters. It is, however, Tom Lee's granny's shot stock, and he likes it a great deal. Let's look at some numbers then. Palantir's gross profit margins, 81%. That's even better than Nvidia and Meta. Zuckerberg is jealous. And yeah, they've discovered a money printing machine. PE ratio, though, is 234, which is like sky high. I mean, insane. It's sort of where the Musk rockets are. So what's fueling these stratospheric expectations? They're pretty much the only game in town that actually allows you to rapidly adopt AI in enterprise and big companies and actually make money out of it. So they automate the entire operations for massive companies, from major insurance companies to hospitals to the military and the intelligence services and so on. And finance, banks, the SEC, they're all using it. So there isn't really anybody else out there who's got a product that can handle that level of complexity. And I think people are starting to notice, Wall Street's starting to pay attention, and therefore the stock is going to the moon. Have a look at the stock chart here. It's gone up like mad. Our little indicator hasn't done very, very well on this, to be honest. Although lately we're doing a little bit better. Why? It's just very erratic, right? Very, very erratic stock. Worse than Tesla. On the August 6th, we called it a buy at $26. We're trading at 43 right now, so that's pretty sweet. That's a pretty nice little run here. So what would you do with that? Well, what I would do is I would draw a trend line. Always connect 3 points with a trend line. 1, 2, 3. It's a bit of a rough one, isn't it? But that's sort of the idea. It's not exactly perfect. And if I fall below that trend line, I'd sell. And the Palantir gang is like, you can never sell as you'll regret it. or you can buy it back, right? So I'm in stocks to make money, not because I have a religious affiliation to it. So if you require that level of faith, then I'm sorry, this is not what you're going to get here. I'm agnostic when it comes to what makes me money. I'm just here to make me money. And we made 94% so far this year. So I think we might be onto something. So that's basically what I look up. Just look at the trend. You break the trend, you're out, right? And then it gives you typically, I'd say 90% of the time, a better opportunity to get back in. And that way you don't have to bag hold for long periods of time. And that's the way I look at every single stock. So we have it. Palantir. Tom Lee loves Palantir. Now, do watch out for the earnings coming up. Watch out for their commercial revenue growth, particularly. That's really gotta keep speeding up. If it does, hallelujah. If it doesn't, high expectations on this one, so you know what's gonna happen. And come and join me on Tuesday and learn our 3-step trading system, because it's just simple, and it above all will give you risk management, which is actually how you make money. And it's free. felixprehn.org/bootcamp. I love you for watching. I love you for tuning in. And I hope to see you on the next one. All the best.